It's Marc Kramer, Senior Lecturer of Entrepreneurship at VinUniversity and the founder of the VinUniversity National High School Entrepreneurship Competition. Today, we're going to talk about how to build your financial model because you've already identified a problem or opportunity that you're going after. You've come up with a solution that you've described for us that anyone can understand. You have done market research to prove that it's not only a market for your product or service, but it has growth potential. And then you figured out what kind of revenue streams can I develop here to support my idea and become a profitable company. But now we need you to go and create a financial forecast. And a financial forecast allows you to see what is the potential income that could come in to the business and what are all of the expenses that you have and what's the net profit. We're not interested in gross profit. We're interested in what falls to the bottom line before you have to pay your taxes. So what information should be found in a financial model? Well, of course, we want to see where the revenue is coming from and how you arrived at those numbers. So if you're saying to us that you are going to go and get 10,000 USD in revenue, we want to know where's it coming from and how did you forecast that particular number before you actually started selling things? What made you think that that number had real potential? How many buyers are there? How many people will actually be interested in buying your product or service? So we're interested in your revenue forecast. We're interested in what the cost of goods to be sold are going to take to create that product or service. What are your operating expenses like salary and rent and marketing, utilities? Because you can't, again, focus on gross profit. You have to focus on net. What's there after all of your expenses? Then we want to know what's the profit loss going to be. And then cash flow is really important. You might operate a business that has great cash flow but doesn't have great profits, but it's enough to keep the business going. And over time, the cash flow will be so good that you'll be making a very profitable venture and you can reinvest that cash flow into either the existing business to grow other product lines or that you'll be able to go and pay everybody more, give people bonuses. But it's really good to know where's the revenue that you're going to get, what are all of the expenses that you're going to incur, will you have a profit or a loss, and how much cash flow can you count on so you know whether you have to go and raise more money, borrow more money, or you're just not able to run the business because you just don't have enough cash flow to sustain yourself. So let's talk about a couple of different businesses. One is a mobile game startup. You have the number of users downloading the game, it's 500,000, and paying users who are looking at the game. That's a free game, but some are willing to pay for a higher level game. Let's say 3% of those people are paying are willing to pay. You got 15,000 paying customers. Let's say the average person is spending $5 a month. They're buying a subscription from you. And so it's a pretty nice size chunk of change that you can make on 15,000. But it's a far cry from the 500,000 users downloading game compared to the 15,000 that are willing to pay for it. But still a considerable number. If you looked at mobile game financial breakdown, you see the annual revenue would be $5 a month times 12 months times 15,000, $900,000. In Vietnam, that's a lot of money. You make really good money on $900,000. Your cost of goods are server fees and platform costs, which are $100,000. Your marketing might be $250,000. Salaries for your team, $240,000. Office software, other things, $60,000. So out of $900,000, you're making $250,000. That's still good money to go and make. So you're almost making 30% on the revenue that's coming in. A baking business, you might get 50 daily customers a day coming in, spending an average of $5 a customer. You're open 300 days of the year because you're taking time off for holidays and vacation, and you're not open every day of the year, so you're only working 300 days. You have custom cake orders of 200 custom cakes per year at $50 a cake. And so that small cafe that you're running, actually, it does pretty well because the cost of the ingredients is 20,000, the rent is 12,000, staff wages are 24,000, other expenses like equipment and marketing are 10,000. And at the end of it, your in-store sales are 75,000, your custom cake is 10,000. You have a total of 85,000. And when you take a look at all of your other costs, such as ingredients, rent, staff wages, and other expenses, it's 66,000. So at the end of the year, you're making $19,000, essentially about 25% net profit. That's a good amount of money to be making, especially on a small revenue bakery business. So now you've got some examples, and I wish you the best of luck, and we look forward to seeing your plan. And remember, really think through your financials and be able to explain them to anybody.